Alright guys, what's up? My name is Josh, I'm from Melbourne in Australia. I've started this YouTube channel just to provide some really short and sharp analysis of the trades that I'm looking at for the week ahead. This is the first one. If you do find any value from it, please leave a comment, like or subscribe, and let's get into it. So the pair that I'm looking at most closely this week is GBPAUD, and we can see here the first thing that jumps out at me is the big head and shoulders pattern that's forming right in front of our faces right here. Now, I'm a very big believer in market patterns, and I do believe that head and shoulders is one of the most powerful ones. We can also use inverse ones. So, for example, this one here, and we can see that market did continue in the direction. So that's the first thing that jumps out at me. Now, also you can see that this area here, there's a lot of wicks and stuff like that that have happened there in the past, suggesting it is a very strong area. And last but not least, if we do put some kind of, I guess, horizontal line, you can see that that area in the past is definitely a huge area of support and resistance. We have one here, one here, one here, and then some just general sort of choppiness around those areas. And this could be known as a false breakout of that level. So that's the first thing I'm looking at. The second thing is we can quite clearly see a W formation right here, down, up, retracement, up. We do expect some kind of retracement down due to that pattern being completed. We can also see that the weekly close of this is lower than here. So we are creating lower highs, suggesting that price is going to start changing its momentum. The third thing, and probably the most powerful thing that I'm looking at the moment, is the Fibonacci leg, highs to low, and we can see here that it closes right below that 78 Fibonacci level. Obviously, this wick up here most likely stopped a lot of traders out who had limits in that order. At that price. So I'm going to highlight this area here as a really big level of interest when we go down to the lower time frames. Now we head down to the daily, and we can see the first thing that we see is that rejection candle forming in that area. I'm not a particular massive believer of candlesticks. I do think they can be useful. I don't base them 100% on entries or anything like that, but we certainly can see one there. Now, if we also use the previous upwards leg of the Fibonacci, we can see right there that market has come really close to negative 27. For those that you don't know, negative 27 is a target for a lot of traders that do use Fibonacci's. We've come within 50 pips with that. Now, obviously, price has had to break through all of this so we can understand why price hasn't fully reached that. Now, obviously, we can potentially expect to see, some kind of retracement back to the zero for further continuation up. I personally don't think that's going to happen just due to all the previous, price action here. Obviously, we can't guarantee anything in Forex, so that's just my, sort of personal opinion. Now, I won't be looking to take any entries on the daily time frame. The market opens Monday morning at about 8 or 9 a.m. In Melbourne, where the rest of the world is essentially asleep. So there's not really much movement. We obviously see really high spreads and a lot of choppiness in that general time frame. So I'll be looking to take them on either the 4-hour or the 1 hour. Now, when we go to the 4 hour, we can see there is a small head and shoulders pattern forming. In this instance here. Now, obviously, it's going to be easy to see on the 1 hour, which I'll go to in a second. But what we can also see is my general rule of thumb is if price is in an uptrend, say, for example, here, and you do see two candles on the 4 hour going in the opposite direction, that's always a pullback. And we can see it here as well. There's a pullback before continuation. We're going down. I do expect to see this considered as a pullback to some market structure within this area and then continuation down. Depending on your targets, we'll go into that on the 1 hour, but if you did go back to the daily, you can see that there is quite a big target level that we could potentially be using here. And we can also see that this movement here is very extended. So we are expecting some kind of retracement. This movement here, I measured it before, was about 750 pips. This one's about 370, and this one's at about 680 at the moment. So we are expecting some kind of pullback. Now we go to the 1 hour chart, and we can see quite clearly here that the head and shoulders is forming again right in front of our face. One here, and we have the right shoulder here. Now, the thing that I like about this setup here is the right shoulder is lower than the highs of the left shoulder. Okay, that's generally what I like to see when I do trade a head and shoulders pattern. Same goes with inverse. I do like to see the right higher than the left one, which is definitely a good sign for me, and another confluence we are looking to go short. The other thing that is a bit conflicting for the way that I trade, but I'm going to put it here anyway because I know a lot of people would have seen it, is the trend line. Now we can see here that it is a valid trend line. We can see 1, 2, 3, 4 taps. We can't even see a fifth one here because the market did initially reject this 1 hour trend line, but then it broke through. The one thing that sticks out to me is we haven't seen a retest of the trend. Now, it's not always necessary that I do see that, but it definitely puts me at ease when I do see that. If we do see this, I do expect us to see it at the start of the London session. Generally, at the start of London, we do see a lot of movement. A lot of the time, it's in the opposite direction than what price is actually going to go. Now, in this instance, there's going to be two areas that I look at to take the trades. Now, it's going to be between the 50 and the 61.8 Fibonacci level. Now, if price does go here, we're going to be seeing more than likely, we're going to be seeing some kind of retest of the trend. I do expect it to be a wick. I don't expect it to be a proper candle close directly up to the trend. I do expect a wick, a little bit of manipulation before we drop. If you use Fibonacci's, you can use this as the first target. Now, depending on entries, how I would take the entries is I would take it somewhere between this 50 and 65. I'd probably look for a little bit of market structure. We can see some right here, right between these two candles and here. So for argument's sake, if we do take this like that, target first, because it's a 1 hour, I could look for stops on the 15-minute time frame. Now you can see here that this was sort of the previous level before this market structure. That's 32 pips. You could make it, say, 42 pips, so 10 pips above, and you can see here that you have a really, really nice risk to reward. Now, why would I place my stop losses there? There's a few reasons, and the main one is price has to go through quite a number of different, I guess, resistances to get there. So first of all, we have the 50% retracement on the 1 hour. We have the 61.8 retracement on the 1 hour. We have a counter trend line, and we have all this market structure here on the 15-minute. So that's not to say that price definitely won't touch it, because, as I said, you can never guarantee anything with Forex, but that is where I would place my stops, purely just for the reason that it has so much to get through, and the risk to reward is really, really good. Obviously, depending on how long you like to hold your trades, I like to hold trades for a couple of days and squeeze most out of them as I can. You could potentially look all the way down here at previous structure, even potentially here, obviously, or this first one here. So either one of these, it's a really, really good trade. Definitely a good trade for the week, and this is the main one I'm looking at. So that's it. I'm just going to try to keep it short and sweet. Please, if you've got any, I guess, good information, or you found this useful in some way, please let me know. Leave me any feedback you can, and I'll aim to produce 1 or 2 of these a week for you guys. So thank you.